The greatest issue facing every investor and every trader: where are the support and resistance levels inside the chart that you put money into? And where are the resistance levels when price reaches out to an all-time new high? More importantly, where are the most statistically significant support and resistance levels? And how can you get a leading indicator of price where you can actually know these levels in advance? That is the CTKS method, and in this video we'll go through the levels on Bitcoin. Let's run the numbers. If you've just started trading and investing, especially in the crypto space, you may just be looking at social media and saying, what are the particular media outlets saying about Bitcoin and crypto? Of course, you can see the different prices, but the issue is, well, that guy's not having a good time. The issue is you need a lot more than just looking at a price. You need to know where the structure is. A lot of people say market structure is vitally important to understand. But why is it vitally important to understand? What does it matter? For example, if price is coming up, isn't that all you need to know? Or do you need to know where structural support is? And what is structural support anyway? There are two methods of structural support. One is retail and one is professional. The professional make sure that they mark up all of price history in accordance with a standards-based process, Level 1 and Level 2 standard certification. This creates the most statistically significant support and resistance levels available. Now, why is that important? Well, it literally comes down to the question, are you putting money into the market and do you care where you buy? A lot of people who are fresh into the market say, oh, I don't really care where I buy. I don't want to be greedy. If you're saying that, please stop saying that. This is born of a very common misconception that all the market participants just take money from each other. This is not the truth. The markets just accumulate money and pay people who know what they're doing, and they take money away from people who are guessing, who are gambling. If you're relying on intuition to make your buying and selling decisions, please stop doing that. The reason that we need to understand where support and resistance levels are is because a lot of people simply don't know where they are. If they don't know where they are, they could be buying at resistance and selling around support. If this is the case, you're going to get onto the wrong side of the percentage all the time and suffer what I call, unfortunately, the death of 1,000 cuts. The market is extremely good at pushing you out of situations or positions and extremely bad at pulling you in at the wrong time, only for price to reverse. When you understand where the support levels are, where the structural levels are, from a resistance stance and a support stance. And what is the difference? Resistance is above price, support is below price. What happens at support levels? The buyers come in to defend those prices. They actually just seek to push it up. What happens at a resistance level? The sellers come in to take profits and to go short, and they seek to push the price down. A lot of people think, unfortunately, at retail levels, everything occurs at a round number, say 100,000. You can see the statistically significant resistance levels are not 100,000. There's one close to it, 99,934, but that's not 100,000 even. If you ever see people saying, oh, there's significant resistance at $100,000, those people don't know structure. And unfortunately, they are retail. Now, what is the difference between retail and professional? Professionals have been in the market for obviously some time, and typically decades. They have learnt by harsh lessons and mainly big losses that a lot of retail people just actually don't know what they're talking about. And if you follow that advice from retails, you're going to get your account blown up. Therefore, it's very important to go independent from the market and rely on yourself. You can mark up your own charts with Level 1 and Level 2 standard certification to see where the most statistically significant lines exist inside your chart. We've seen a very big push in Bitcoin's price, and of course a lot of people thought that this push would go on forever, but there is structural resistance at that 99,934 level. There's also structural overhead resistance at the 100,871 and the 100,988 level. What we're looking at right now is a positive CTKS gap. Now, what happens in these gaps is you get a lot of upside and potentially a lot of downside volatility. You can see it here. When you get a negative CTKS gap, it can turn very positive very quickly, but the other side holds true as well. Now, typically what people do, when they see price going up and up and up, they tend to buy when they're most certain it's going to continue. They don't actually account for any retracement of price, and they do not know the structurally significant support and resistance levels. In all, they're setting themselves up for really major losses. Having been inside financial markets for nearly 40 years, I can't tell you just enough how important it is to know your structure. Let's go into what's awaiting Bitcoin in the next 24 hours. You can see that the sellers around the $100,000 mark are defending it realistically quite well. And we've got 3 levels of structural resistance above, and that purple line is a previous all-time high. So when we break through that, we've got this structure to contend with. But we would also imagine as Bitcoin comes into the 100,000, retail is going to FOMO in something chronic. This is not a retail channel, this is a professional channel, so what we're all about is getting in when retail is just looking in and saying, yeah, I'm not touching that. If you look at yesterday's video, I was explaining how I lean in at spot with $100,000, $50,000, $20,000 US positions. This is not leverage, this is actually at spot. So for example, if I bought Bitcoin here and I sold it at this particular level, so buying at structural support and selling at structural resistance, that's about a 2.3% return. Now, a 2.3% return that you can turn over and over and over again is a huge amount of money. Unfortunately, retail is just talking about, oh no, I need 1,000x return. I need to get so many X's. I don't even know what an X is, but I know I need a lot of them. What you'll actually find, if you know where structural support and structural resistance levels are, you can make a fortune buying at structural support and selling at structural resistance. And you can turn your money over and over and over again. One of the greatest problems that retail faces is that they understand that they need to be in the market, so they go all in at one position. Well, that's okay if you go in at the right position, but it's more likely that you'll go in at the wrong position. Now, why is that more likely? Because retail is always about certainty. People just look from a retail perspective and say, Warren Buffett said, I can't lose money and I need to be fully invested. Yeah, Warren Buffett is fully invested. Yeah, right. He's sitting on hundreds of billions of dollars worth of cash. So you're getting advice that you need to be fully invested, whereas the people who are actually inside the markets literally all their lives don't do it. Now, why don't they do it? Because they're seeking to buy the dip. They always want to get in when price is coming down, and that's a pretty weird feeling to do. After all, isn't it going to zero if it retraces? No, it's going to a structural support level. Oh, okay, but what if it goes up and it goes up really quick? Oh, that's going to infinity, right? No, it's going to a structural resistance level. This is why it's so important to know where the structure is inside the chart. If you don't know where the structure is, you're just flying blind. It'd be like you're driving in a car with the windscreen just totally blacked out. And no, you can't put your head out the window and do it like Ace Ventura. You can't do that either. One of the things that I would really recommend you doing is buying under retracement levels. Now, why is that important? Because if you buy under retracement levels, you can sell the percentage gaps, and they amount to a huge amount of money. But Ken, what happens if it just goes up and up and up? I hear about bananas or something. Sure, price can do that, and you can always put in positions, but you want to actually fraction your account out so that you can invest and you can trade. Now, why is trading so important? Trading is absolutely important because traders know how to buy and know how to sell. What do investors? What's their superpower? They know how to hold on for dear life and through sleepless nights and cold sweats. And why do they get sleepless nights and cold sweats? Well, it's simply because they can't sell. Okay, that seems like a really easy problem to solve. Well, just learn trading. Oh, but what about tax? This is the funniest thing that I ever hear. People think that profit is just automatic. Who said the profit is automatic? What if you're buying at the wrong time and selling at the wrong time? For example, say you bought here and you saw the price coming down and you sold there. Or say you bought up here and then you sold down there. You're making a loss. The market has what are called knowledge taxes, and I'll be explaining a lot about this in the new course, Profiting from CTKS Method Structure, which you can get absolutely free, but only for a strictly limited time. And conditions do apply. Check the links out in the description of this video. Knowledge taxes are huge. They're just absolutely huge. Anytime you get a loss, that's a knowledge tax. Anytime you miss out on an opportunity, that's a knowledge tax. Knowledge taxes are compulsory inside the markets and government taxes are optional. Okay, Ken, but what does it mean for Bitcoin's price? I want to know where it's going. Well, you've got your structural levels right here. It's going in between them. So for example, if we get a retracement back to the 97,180, if this doesn't hold, there's negative structural attraction to the 95,786. If this structural attraction just back to here holds and we get a bounce, we're expecting positive structural attraction to the 99,934 level. It's realistically so simple. If a structural level holds, it's going in the opposite direction. And if a structural level holds here, it's going in the opposite direction. It is really simple. And you have all the structural levels already. So all you need to do is to understand what is the direction and momentum of the market. You don't need to scour the charts for what is the support level, what is the resistance level. You've already got that through the service indicator or through marking up your charts with level 1 and level 2 standard certification. What you need to know is simply which direction is the market going. Is it going up or is it coming down? And your structure will always confirm the actual market direction, and structure is your absolute guiding light. How do you determine the direction? The direction comes through the cheat sheet. For example, if we look across the different rows, where are the different rows from the cheat sheet? If you go to CTKSmethod.org, the cheat sheet is absolutely free. You can download it. It's just on this homepage. But what I'm going to do for you just here is to show you the different rows and show you how they actually work. And members of the service, the different rows on crypto have all been released, and row 1 has been released as well. Make sure you update your indicators. Now, what is row 1 of the cheat sheet? It's the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. A lot of people will say, Ken, I'm in crypto. I only want to see how Bitcoin is moving. Bitcoin is the most risk-on asset class on the planet. It really cares about what row 1 and row 2 do. For example, if the VIX is starting to base out and starting to spike up, you can bet your bottom dollar that Bitcoin will come down. But Ken, I only want to hear Bitcoin going up and up and up forever and ever. Well, that doesn't happen, and it never does. And if it goes up and doesn't retrace and digest its gains, when it comes down, it's going to come down really hard. Professional traders know this. You must know how to trade if you're an investor. You really need to know how to read the cheat sheet. You need to look across a lot of different charts in order to understand how your chart is moving. I would go as far to say that if you're only looking at your chart right here and you say, oh, Bitcoin, just because of past price action, is going to do X, Y, and Z, it's not about Bitcoin. It's about the entire economic system. Bitcoin is just a component of it. You can download the cheat sheet absolutely free of charge from CTKSmethod.org. It's all about understanding the daily movement, direction, and momentum, because inside these 32 charts, you already have the structural levels. I just showed you a little slice of the structural levels on Bitcoin, but you have all the structural levels across all of these 32 charts. In other words, you already know where support and resistance levels are. That's not your issue now. Your issue is to understand, where is the market going? Is the market breaking out to all-time new highs, and is it going to be supported? And we've seen some pretty fair action on the S&P 500 and the Nasdaq recently. But as always, where is the structural resistance? Even as we looked at Bitcoin, we saw it was breaking through its structure into a positive CTKS gap, but it has structural resistance overhead. That's the sellers seeking to push the price of Bitcoin down. The thing to know is Bitcoin is impacted by the DXY. We can look at the DXY and dollar-yen in combination. We can look at the inversion of the euro-dollar and the Aussie dollar to figure out where the DXY could be going. Also, when the DXY goes up, it typically takes yields with it, say the 10 and the 2 year. So if we see something like that, we expect gold and silver to go down. But if the DXY is coming down, we expect gold and silver to come up. Typically, when gold and silver come up, that is a good play for Bitcoin and also the stock market. You can already see all of these different charts are intercorrelated and interconnected. And you thought you were just going to be able to look at Bitcoin and decide, yeah, Bitcoin's going up or down, by not looking at the other charts. Of course, you can try, but that's realistically just gambling. And don't forget, if you gamble, the house always wins. Your knowledge taxes will be insanely high. But Ken, I'm just looking at Bitcoin and I'm really profitable. Well, that's fantastic, but just imagine how much more profitable you would be if you actually did a professional analysis of the market and then looked at Bitcoin and crypto. You would just rocket. Okay, back to Bitcoin. So do we race in and buy when it's all going green? No, we'll leave that to retail. Retail does that. We look to buy at structural or around structural levels. If you get positive air gaps, this just means that the buyers are coming in to support the price. These are not brick walls, even though they act like it from time to time. What you want to see is strength coming into the market or weakness coming into the market. Whenever you get into a CTKS gap, know that you have both upside and downside volatility, and you will know this immediately because you know where the structure is. Do not use intuition, do not use gut feel. Stack probabilities. That's exactly what professionals do. If you're looking at Bitcoin's price like this, it's all up and down and all over the place. In order to avoid as many market taxes as humanly possible, and if you're in Bitcoin and crypto, please also look at total crypto market cap. What you can see here is a very interesting playing out of price action. Remember how Bitcoin just soared, and then the crypto market has been pulling back. The question is why? The answer is always the same. It's structural, support, and resistance levels. If you know where they are, it's an absolute game changer. And what happened at this $3.53 trillion level? We came up through a positive CTKS gap, hit resistance right across the crypto space and retraced. What do we anticipate happening next? You see, I'm looking literally at Bitcoin's chart, even though I'm looking at total crypto market cap. And this is how you want to look at things. This area will be an area of support because retail will be looking there. They'll be looking to see things start to turn around. Notice this low here on total crypto market cap. We're going to go back to Bitcoin. Okay, you can see this low on Bitcoin, and that coincides with an area or region of retail support on total crypto market cap. That means around the 97,605 mark or 600 mark, we would anticipate that Bitcoin could bounce up, and that would coincide with structural support around the 97,180 mark. If you're putting any significant funds into the market, and many of our community members put in millions of dollars into different positions, it really matters. Those percentages can be very, very deleterious or very problematic to your account if they go down. Therefore, what actually stopped Bitcoin's ascent was this structural resistance level at $3.53 trillion. The entire crypto market came up through this positive CTKS gap. It's been just retracing at the current time. It is likely to come back and to hit its own structural support inside Bitcoin. And note how I'm looking at total crypto market cap, but I'm observing what's happening in Bitcoin's price chart. This is the level that you need to get up to. And we don't stop here. This is just the entree. As we're in a positive CTKS gap that's turned into a negative CTKS gap, we need to keep our eyes on this $3.41 trillion structural support level. Where is that going to play out in terms of Bitcoin? It's going to play out right there. Let's pop back to Bitcoin. Knowing how support and resistance actually works in practice is incredibly important. You can see this 94,900 level here. That's the retracement if total comes back to total crypto market cap structural support. At least you know where the structure is. In order to do that, Bitcoin will also exert its power across the totality of the crypto market. Knowing where your support and resistance levels are is absolutely, utterly critical. You want to also look through the chart, look beyond the chart that you're looking at into all of the other charts inside the cheat sheet. They all have their part to play. One thing with education, the reason that we go to university in the first place is simply to learn how to think. You need to learn how to think about price action. If you're to master price action, you must think correctly about it. First thing, you need to know where the structural levels are. Second thing, you need to look through the chart that you're looking at to the different charts that cause this chart to move. Those charts are inside the cheat sheet. You can take it slowly, one at a time when you're just getting started. For example, if you're looking at Bitcoin, make sure that you look at total crypto market cap. And then over time, start adding in different charts. Look at the DXY next, look at the yields next, look at the VIX next. You can take it slowly, but you need to progress. And then you'll get to a stage where you just look at price action and say, I wonder what the VIX is doing right now. Remember that putting money into financial markets shouldn't be like going to the casino. If it is, you're just going to get wiped out. I'm sorry to say it, but we've all been there. You just don't want to do it. What you want to do is to learn how the actual markets work. And then you can create lifelong skills to make yourself more of a financial blessing to yourself and those you love. Please let me know in the comments, is there anything else that I could talk about or discuss with you that would help you gain a better appreciation on structural support and resistance levels? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.